I'm going to call this Finance and Economic Development Committee meeting to order. We have a 2-item agenda. Are there any changes? Oh. Well, now I'm going to call the Finance and Economic Development Committee meeting to order. It's 8:31. We have a 2-item agenda. Is there any changes?
Yes, I do want to talk about some resource considerations.
Okay. With that, can I get a motion to approve the agenda?
Move to approve the amended agenda.
Second.
Moving second. Is there any discussion? Seeing none, all in favor of the motion signify by saying aye.
Aye.
Anyone opposed? The motion carries. We have an amended agenda. First up on our agenda is our 2022 second quarter investment report.
Great. Thank you, Mr. Mayor. Good morning, everyone. We are presenting the second quarter investment report. This committee has asked to see this report twice a year. Just as a reminder, policy requires us to do it at least once a year, but it seems like we've always been in this state of flux, and it makes sense to provide more economic information to the council than less. So certainly makes sense. The report hasn't changed a great deal in terms of format. You have a pretty detailed report that was prepared by our investment advisor, which is Government Portfolio Advisors, or GPA. The report includes market outlook. It includes a section that shows our compliance within the adopted policy. Also shows a summary of all the activity that happened throughout the quarter. I'll just say in short that we narrowly outperformed our benchmark. I mean, just by a tad. Our net core return, total return was a negative 0.58%. The benchmark was a negative 0.65%. The reason we have a negative is it does include the change to market values of our investments. So that's all netted together. We actually did not lose money. We've talked about this in the past, but it's worth mentioning again. We will not lose any public funds unless we choose to sell at this moment. So that's what that means. It's really just a snapshot in time of what the value of those investments are. Of course, we're in a rising interest rate market, which means the investments that we bought 2 years ago or 1 year ago at lower rates are worth less to the market if we went to sell those. So again, we will not realize those unless we actually sell those investments. Quite a bit has changed during the second quarter. It's changing rapidly. It's going to change again probably tomorrow, depending on what the Fed action is. But you might remember the fourth quarter 2021 report. The market was expecting 3 total hikes through the entire calendar year of 2022. We've already had 3 in the first 5 months of the year, and significant rate increases. We had a 0.25% increase in March, 0.5% in May, and 0.75% in June. We are expecting, or the market is priced in another 0.75% increase this week. So a lot different than we expected even 6 months ago, 3 months ago, 2 months ago, 1 month ago. I mean, it's changing rapidly out there. But the expectation now for year end in terms of the federal rate target is between 3.5% and 4%. So to get there, it's still going to take some pretty significant rate hikes. And I think September is the next meeting, November is another meeting. So there's not a lot of time, not a lot of meetings to get to that 4% range. So the expectation is continued significant increases by the Federal Reserve. That's what it's going to be.
It's going to be one.
Last week, I think last week the market was thinking it was 50-50, was going to be 1%, but a little stronger. I mean, the job market is still strong, although it's showing signs of weakness. The unemployment claims last week were the highest of the year, or of the month. Actually, June was the highest month of the year so far. Still, still hasn't moved on the unemployment rate, so it's not, wildly changed, but certainly showing indications of a little bit of weakness in the job market, which has been one of the things that's, certainly one of the positives out there. Gross domestic product. I think we've all been reading that it looks like the first quarter was a decline. That hasn't been finalized yet. I think they're on their third estimate right now. I don't know when to actually call it, to be honest, but it's looking like it was a negative 1.6. I think there is, there's stronger indications that the second quarter was also a decline, but that's very much up in the air. There's, depending on who you ask, I mean, there's a difference of opinion on whether the second quarter actually had a decline. This is often a signal of a recession. I don't know that there's actually a single agreed upon definition of a recession, but certainly 2 consecutive quarters of declining GDP is one of the definitions.
So real quick, so just on that Fed thing, if the rates go up and people have a struggle to finance things that are necessary to finance, that doesn't necessarily mean that producers are going to lower their price or decrease the amount that they're charging for that item. So I'm still trying to figure out how this is going to help us if that rate goes up again today.
I think they're just trying to attack the demand side of it. So theoretically, if you stop buying cars, trucks, trailers, whatever, then the supply chain will realign itself. And then you'll slow down production, you'll start laying people off, and then at some point it will go into recession and hopefully realign itself.
So send us to a recession so that we can boost or to realign the chain and then push things forward from there.
Yeah.
That's their plan.
That's a
Don't think
very
it's the
interesting
smartest of
strategy.
plans, but it's a plan.
Well, how did I heard the other day, they said they're trying to put the economy into a stall, like think of an airplane without crashing.
Huh.
That's a fine line.
So
I guess, that's cool at 30,000 feet, but what if you're at 5,000 feet?
Well, and actually, we have seen signs of companies starting to lower their price. Walmart just came out and said they're having to lower their price because their customers are seeing the higher prices and are starting to pull back. So they're starting to lower their price. And so obviously Walmart is our largest retailer in the United States. So that's, a sign that people are starting to feel this. And so whether you call it a recession, I guess it's an independent body that determines what a recession is, and they have to come out and let you know. There's all these, but if it feels like a recession, then it is a recession, right? So
It is reality.
yeah, perception is reality for sure.
well, we still recorded 9.1% inflation. I mean, that's still the problem.
And the benchmark that we're trying to reach.
Well, no, in terms of our inflation, our latest inflation number is 9.1, the highest it's ever been. And so they're trying to respond to that.
And the benchmark we're trying to reach.
So they always went 2 to 3%.
Yeah.
2 preferably, right?
2 is the current, yeah.
But
Not
it's
the Seattle index, but nationally it was a little lower than that.
Nationally was 9.1, Seattle was 9.5.
Oh, okay.
so. So ultimately, what's this going to do to our investments? As you pointed out, we only will lose the investment if we sell. Sooner or later, they're going to come. It's going to come up, right? So at what point do these investments come to fruition?
Well, right now, Mr. Mayor, that's part of the strategy, and just a slight change to our strategy is we look at duration. So, this committee and council, last fall, we changed our benchmark in terms of duration from 0 to 3 years to 0 to 5 in anticipation of this moment, rising interest rates. So we want to be able to take advantage of the higher rates at the other end of the curve. And we're slowly getting there. So we're still below the duration benchmarks because it takes time to turn over our portfolio, but we're getting close. So the benchmark is about 2.1 years. We're just under 2 years. So we're getting there, but the strategy is to stretch that duration a little bit. So go a little bit beyond the benchmark because we're trying to take advantage of those higher rates at the 5-year range. To give you an idea how that works or how it is working currently, we're purchasing an investment today. I mean, we had something mature and we're reinvesting. The transaction is happening today. The maturity was 0.125%. What we're buying is 3.5%. So significant change in terms of what those interest rates are doing. It's going to take time to overall in terms of the entire core to move that rate, but we're getting there faster than we have in this last 5 years. So again, we're looking to stretch the duration a little bit to take advantage of those yields at the 5-year range. At the same time, keeping mindful of liquidity and those issues too. So we do need that kind of continuous maturity, so we have cash flow in case we need it in terms of emergent issues and things like that. So that's really the end of the report. If there's any other questions from the committee, I'd be happy to answer, or if anything for the city manager.
Anyone?
News is, as in the past, just like with the Great Recession that we all went through, we're in a better place than most jurisdictions, I would say, to handle it and absorb it and do it without having to have layoffs and that kind of thing, whatever comes at us. So that's good news.
I agree. Then let's go on to our 2023 budget calendar.
Thank you again, Mr. Mayor. It's become customary for us to share this annual memo with this committee. It's really the real kickoff to the budget season. So we send this out late May, early June. This, I think, was sent out very early June. Well, as you know, us finance people are much better at looking backwards and forward. I mean, we can tell you what happened, but we're not really great about predicting the future. And this is certainly an indication of that. This memo is less than 2 months old and pretty outdated. The memo talks about inflation, US inflation being 8.3%. We thought it peaked back in April because that inflation was actually a decline from the previous month. We thought things were turning a corner, and then, last month, June, US inflation was 9.1%. So we had not peaked. So we were certainly wrong in that prediction. But, we certainly do expect it and still continue to think that it's going to decline throughout the year. And, certainly I think markets are adjusting to that fact as well. We talked about, interest rates, Federal Reserve in this memo. Of course, we thought the economy was slowing down and it hasn't. So now we're talking about a completely different direction. Well, not completely different direction, but continuing high interest rate increases by the Feds every time they meet. Sales tax is pretty much the same. I would say the same concern as inflation. Where sales tax certainly isn't growing like it has been the last 2 years. In that 1% to 2% range, but inflation being 9%, you have to think that a lot of that increase is inflation. I do have the current sales tax numbers. I'm having a little difficulty deciphering them because something happened with the report and the categories are a bit off. So it may take me a little bit to decipher exactly what those reports are saying, but it did show a $10,000 increase from last year. So it's, that's less than 1% month to month, over that year. So much of the same as we've seen with sales tax this year so far. Still higher, but certainly the rate of growth is much lower than we've experienced. We are seeing other revenues, emission tax, gambling tax, parks and rec fees. They're increasing, but they're still not at the pre-pandemic levels. I think that, obviously COVID is still out there and people still have fears. And I don't think life is completely normal, but we're certainly seeing signs of that. So that's good news in terms of those also consumer-based type revenues. So again, we're seeing positive gains there, but still not at pre-pandemic levels. In terms of expenditures, as you saw from the first quarter report, no surprises there. We still see salaries and benefits quite a bit lower than we've seen or we budgeted for. Part of it is we don't have settlements in a couple big labor contracts. We also are still running about 10%, 10% vacant positions. So, that's certainly a big reason for that as well. In terms of the direction for the budget, much the same, in terms of alignment in the investment report, we're still being very cautious. The intent of the Federal Reserve, as we discussed, is to slow down the economy. They don't want to put us in a recession, but the goal is to slow everything down, which is kind of the opposite of what we want to see in terms of revenue generation, in terms of our ability to serve the public. So it's kind of a weird dynamic, obviously, in terms of wanting the economy to slow down, but at the same time, potentially harming revenues. The report at the time thought the June meeting was going to have a 0.5% increase. Of course, you saw a 0.75% increase. Going to continue to see that. There are signs of the recession, and we've talked a lot about the yield curve inversion. The 2-year versus the 5-year, 2-year versus the 10-year, the 3-year versus the 10-year. Throughout the year, the curve has inverted. It's inverted. I think the 2 to 10-year curve is inverted at least 2 times, I think, this year already. And we may be inverted right now. I haven't looked here recently, but those have been, I think those have predicted every recession since the 1930s. It's not always an indicator of a recession, but it has predicted every recession that's occurred in the last 80 years. So certainly something we're watching. So in terms of the budget guidance that we've given the organization is we need to be cautious because there is an intended slowdown to the economy coming. Scott does a really good job in developing budget themes. I don't know what his theme is this year, but we've talked about
Optimism.
I was going to say 2023 was going to be a reset year. So obviously we're not on the same page quite yet. But the message has been, we need to be aware of the intended economic slowdown. We've had lots of delayed projects, the council knows, as we've watched supply chain issues, labor issues. We've had our own internal staff turnover and labor issues. So the message is, let's try to catch up with all those projects that are kind of waiting in the queue for supplies and staff to get on board. So we'll call it an optimistic reset year. How's that, boss? But yeah, I think it is an opportunity for us to reset and catch up. There's going to be, I believe, a lot of carryover projects from 22 into 23. So we'll have those to contend with at the same time as potential new initiatives in 2023. So that is the message that we sent out. In terms of budget calendar, that's one of the main reasons we come before this committee is to, give you an indication of what's coming. And if you remember from past years, this calendar isn't much different than what we've seen in the past. Budget proposals from departments are actually due this week, so those are coming in. We'll spend August reviewing those proposals, meeting with departments, talking about those proposals. We hope the city manager will have the budget balanced by the end of September. We'll have our budget workshop, the first meeting in October. The much anticipated city manager budget presentation is October 20th. We'll start our public process. So we're required to have a minimum of 3 public hearings. The first one will be November 3rd. We'll just have a general hearing on the budget. November 17th, we'll have the revenue hearing. That's also the night that we hope the council will consider the property tax ordinance as well as utility rate ordinances. I will note that November 17th is the same week as the NLC conference. So, if there's any good to come from the pandemic, it is our ability to have remote meetings. So hope that, I'm not sure where the conference is this year, but
Kansas City.
Kansas City. Okay, well, There'll be a little time zone difference, but hopefully there'll be some, depending on what the attendance is, of the council to have a quorum. We'll hope that some of the council members can log in through Zoom. We'll have a final budget hearing on December 1st, and then we hope the council will adopt the budget on December 15th.
A lot of hope in there, Troy.
We'll get there. So
More than hope, we have no choice. Sadly.
yeah, there's a little.
We have deadlines on all of that. We will get it done.
So I'll turn it back over to the committee for any questions.
Are there any questions?
Now,
Looks good. So, the city manager, every year I've talked about doing workshops for the public on city finances and how to understand your property taxes and all that stuff. We sort of did that a little bit last year with the treasurer and the assessor. Are we planning on doing it again this year?
Would like to do that again. I thought that was a good, it was a conversation with council. I thought it was a good dialogue, and the more that we can actually communicate the tools of the assessor's office as well as the treasurer's office, I think it's a great, because private taxes are the single most, I think, frustrating aspect of taxes to people. They're the most focused on that.
And it's not only just explaining property taxes, which is a big part, and it's understandable, but what I think we need to focus on is not only property taxes, but understanding city budgets. So how is a city budget different than a business budget or a home budget? And we've been doing, some of us have been doing this for quite a long time, and it's still confusing for us to look at the different accounts. And you're thinking, oh, well, look at, all this utility tax keeps going up. You guys are flush. Yeah, well, that's a separate account, and I just think we need to do more explaining on understanding your city budget to the public. And it's because it's very difficult to understand the difference between general fund revenues and other revenues and different accounts. And, so I hope we can continue to do as many of those public workshops as we can to understanding city budgets.
Yeah, I think the challenge we have is getting people excited about the budget. I think the last time that someone really got excited about the budget, if you recall, we were at River Ridge, we were talking about pickleball courts. That was the most enthusiasm I've ever seen. I'm just one example, but you're right. I agree. It would be nice if people would, because they're concerned about city finances. But I think we come to some of those strategies, figure out we do some outreach to folks.
Well, and now with technology, we can do these workshops, budget workshops, explaining things, and then we can then push it out when people have questions, right? And so maybe we do a series of videos on city budgets and explaining city budgets. And at least that we have it there, so we can keep referring it to people when people question your budget or question our property taxes are going up, and we can refer people to videos that we have.
Okay.
that or a series of conversations with council. Same way you did it last time with treasurer and the assessor, but do one focused on city budget too, same kind of thing.
Right.
Because those are all videoed and available for the public after the fact too.
Well, the new website too, I was just talking to Shannon about this, and there's an area highlighted that you can do a little bit deeper dive into the budget if you just want to kind of go next level and figure out what's behind the numbers. So we can expand on that process too.
Yeah, that'd be great.
Okay.
Okay,
Last item.
next item.
So we always go to this committee if we're going to make changes in personnel. Troy had mentioned we are still down about 31 positions. That's 9% of our workforce. So it's like having 10% of the workforce not here. So that has been a constant struggle. We've done some, I'll give you just a great example. So Roger retires as a city engineer and then Aubrey takes that slot. So now Aubrey's position is vacant. And then Ashley gets that spot. Now Ashley's position is vacant. And so we're still down one person, even though we made basically 2 promotions. As you know, Ashley has been our primary project manager for all of our capital projects that come out of the general fund. So those are just an example of kind of what has been going in the last sort of year. 2 positions I'm looking at that we need to add to the organization. One is a transportation civil engineer. We have 16 transportation projects in varying stages, either design, pre-construction or construction. We have another 19 in 2023, and we really just have Martin and one other civil engineer doing that. So we're going to get behind if we don't add another transportation civil engineer. Good thing about this position, about 75% of that will be taken out of the arterial street fund. So there won't be as big impact to the general fund, but that's something we need to add. We talked about doing it during the budget, but I mean, we need to do it now. It's very difficult to find civil engineers in general in this market. So that is one. The other one is a facility maintenance. We need to do a reorg within our facility maintenance arena. We have basically 1 senior tech and 2 journey levels. We have 95 structures in the city right now. We just acquired another one with Long Lake House. About 280,000 square feet. Chris, who's our senior maintenance tech, is spending probably more than 50% of his time doing admin work. So think about trying to work on a new police station. So now you're in meetings with architects and talk about, don't do this type of building material, or don't do this type of roof. So we're losing that capacity, that one. So we need another journey level position within the building maintenance. That would be about a $105,000 impact to the general fund budget. There'd be a promotion to Chris's position as we do that reorg, but we're still assessing what that would be. So those are the 2 positions when bringing the committee that we need to continue forward right now.
So that'll add to the 31 unfilled. So you'll have, you're looking to hire 2 more, so you'll be at 33.
Yep.
And can you explain where the revenue comes from the street fund?
Say that one more time, Aaron.
Where's the revenue come from the arterial street fund?
So the arterial street fund obviously is a different fund. So you get gas tax, REIT, and also development fees are the primary contributors to the arterial street fund.
I was doing that for the public's sake. Again, the budget is very complicated.
Yeah, and so separate than the general fund, that's its own specific fund.
Yeah. Is there any questions to Scott?
Oh, need them, find them. Good luck.
Appreciate the support.
Okay. Well, with that, we've reached the end of our agenda. So without objection, I will call this meeting adjourned. Thanks, guys.
Thanks.